he was buying up everything in town. I'm like, "Where are you getting the money to do this?" And then he told me, "I joined Jake and Gino, and it's syndications." And he told me about, the syndication model. I thought you had to have money or partners to do all this, and didn't understand, how to break it down on a different ownership and, the GP portion, the LP portion.
Hello and welcome to the Movers and Shakers podcast. My name is Gino Barbaro, co-founder of Jake and Gino, multifamily investor, educator, father, and mentor. Today, I want to welcome Mike Schlickbernd to the show. Mike has been a member of Jake and Gino since October of 2021, and he and his wife, Jerry, have created a conglomerate. When I say conglomerate, I mean conglomerate of companies in the real estate industry, including Schick Construction, Orange Property Management, Dream Vesting Capital Group. Mike, what are the companies am I missing there, Mike?
DVG Realty Group and Orange Property Management and Solid Roofing and Exteriors.
Dude, welcome to the
Yeah.
show, Mike. How you doing, brother?
Oh, thanks, Gino. I'm awesome. Thank you for having me here. Excited to be here and share a little bit about what I do.
And I want to start off with, how did you get into real estate? Everyone sees you now with these 6 or 7 entities going, I can't do what Mike does. But you probably started out with a single family home, or what was your journey? Why real estate, and how did you get into the real estate industry?
So I started in real estate in 2002. I saw an ad in the paper for a property manager. It was an on-site property manager. It's a small 12-unit building. They're looking for somebody just to live on site and just take care of the day-to-day little things that come with the 12-unit. So my rent was paid for, not completely, just a portion of it, and took care of that property. And then I did a good job. Lived there for a year, and then they asked me to move up to another property of 75 unit that they had, and then I'd also do maintenance work for them because at the same time, this was part time. I was a project manager for a construction company in Omaha.
Uh-huh. So then when you're moving up, did you ever see yourself actually investing in real estate, actually buying your own properties?
Yes, the ad struck me too because I wanted to be in real estate. I've always thought about owning properties and being a landlord myself. So um, I thought this would be a good first step to jump in and learn the ropes and be a property manager.
And when was that first deal? What did that very first deal look like for Mike Schlickbernd?
So the first deal I bought was a duplex in 2005,
Wow.
I still lived on site where I was at as a property manager, and this property I bought the duplex, did some light renovations to it, and then it had a unfinished basement that I turned into another unit, so it ended up being a triplex.
Wow. And that's 2005. Did you hold
Yeah,
on to that deal? I mean, what happened when the 2008 when the recession came?
it still performed for me, and actually the tenants that I had ended up being employees of mine as I grew my, as I had stated, I was a property manager. Then I was doing maintenance on the properties because I had a construction background. And then they wanted me to start renovating the units. So then I hired one guy, two guys. We were updating the cabinets, putting in new flooring, and then the bathrooms as well, retiling the bathrooms, new cabinets, updating all their units.
Wow.
And so I
Mike,
just grew my team, and they had multiple apartment complexes around Omaha, and so I started doing like the majority of their work.
what's your most favorite part of the business? Because it seems like you're raising capital now, you're doing property management, you're in construction, you're an investor now also, you're buying these
Yes.
assets. What do you like the best about real estate? What is your favorite type of it?
Well, for me, with my construction background, I've also flipped tons of houses in the past. It was just taking something and turning it, adding value by making it a nicer asset. And
Mm.
so for me, I like adding value to the community, improving the properties, and it's a lot of the hands-on and operations that I really dug my teeth into and helped my team out to grow was the operations side of it. I would say my least favorite thing is the numbers and the financial part. That's why I hire other people to do that for me. Um, I'm more of a hands-on and let's do this and the motivation and get my team around me to accomplish the goal and tasks that we have at hand.
Let me ask you, Mike, when you're doing these though, did you come to a point where like I keep making these things beautiful, I keep flipping them, but at the end of the day, I got to do it again and I got to do it again, and it
Hmm.
gets to be a grind. When was that point for you?
I would say in 2016. My wife and I met in 2010, and she's a real estate agent, and I'm the construction guy. I was doing renovation and house flips for other investors, and then her and I started flipping houses together. And then going through the process of flipping them, turning them, and looking back on it, I wish I would have held all those properties or did the Burr method. Uh, but yes,
Hmm.
I would say 2016. We were doing renovations on like smaller unit apartments for another investor, and then I was thinking, why am I not doing this myself? And I actually partnered with one of your students, Chris Pomerlew. Him and I bought a 20 unit. Um, that was we just partnered on that deal, and we still own it today, and it's a great performing asset.
What did your wife say? Was Jerry on board for? Because I'm sure
Yes,
she's the
yes.
numbers. I'm sure I don't want to say
Yeah,
she's the brains of the operation, but
she definitely is the brains behind the operation. The numbers. She's always the numbers. That's her strong suit. I'm more the hands-on, get it done, repairs, whatever need. Getting the budgets put together
Mhm,
and reviewing
mhm.
the numbers. So for me, I
That's
just like the
awesome.
numbers presented to me.
And let me ask you, when you're going through that whole process and then you decide to buy the 20 unit, what made you decide to join Jake and Gino? I mean, you joined in October 2021. It was a couple of years after you bought that first deal. What were you
Yes,
struggling with in multifamily?
yes. And then Chris and I bought a 22 unit, and then all of a sudden he was buying up everything in town. I'm like, where are you getting the money to do this? you know, um, and then he told me I joined Jake and Gino and it's syndications, and he told me about the syndication model. I thought you had to have money or partners to do all this, and didn't understand how to break it down on a different ownership, and the GP portion, the LP portion,
What
and
was that?
putting that
What
all
did, what did
together.
you what did you feel like when? Because I felt sort of the same way. Like when I started my journey early on, I was wondering how do people scale up. I mean, I learned creative financing. Seller financing is amazing. We bought 4 or 5 deals using seller financing, and then I learned the syndication model, and I learned the refi and roll model as well. What did you say to yourself? Like, let's dive a little bit deeper into that. You have a partner, you have 40 units with him, you're stuck there, you're still doing these flips, and he's got 600 or 700 units in the
Yeah.
same market that you're in. You must have been like, what's going
Yes.
on here, brother?
Yes. I was, and here I'm doing all this hard work and not realizing that leveraging others and partnering with other people, there's an opportunity to have more just yet with a piece of the deal and bringing my value, um, versus trying to do it all myself.
And
Um,
that's an amazing thing. I love that because that's what multifamily I think Mike lends itself to. If you can speak to it, it is a team sport. Sometimes when we're all by ourselves, and I think the community epitomizes that because when you're at an event, you're seeing some people who love to raise capital. You're seeing some people who love to asset manage. You're seeing some people who love to find deals. You see some people who love to property manage. It's very hard as you're scaling up to be able to do all of those things together. And when you started joining and you started seeing that, what did you say to yourself as far as selecting a market and looking at deal flow? What was your ideas about that as you were joining?
um, yeah, just thinking bigger and outside my market. For me, everything is set up in Omaha with our property management, our construction, our real estate team, and so. Um, Again, it's all of a control thing for me versus thinking outside the box. And there are other markets that I could be in. Why not explore those? It doesn't have to just be in my backyard.
Hmm.
And so,
You talk about limiting beliefs. Let's dive deeper, a little deeper into the limiting beliefs. What are the limiting beliefs held you back from growing your businesses? Do you have any that you can think of right now?
the biggest one is I'm not good enough. I've always felt like I had a chip on my shoulder, something to prove. And again, maybe that's why I had this thing where I got to do it all myself or have something to prove. And so, I believe that's held me back a lot. And and the scarcity mindset as well. Uh, so
How have you been able to And to me, they're not even limiting beliefs. Those are what we call, to me, repetitive, unpleasant thoughts. I learned this from a
Mm.
doctor because and we're like gremlins. Like when we learned in life coaching school, those are what we call an energy block. A limiting belief is something that, wow, it's limiting and it's holding me back. But then once you do it, you pretty much conquer it. You pretty much get over it. And I think that's maybe it is a limiting belief, but those gremlins in your mind, like basically, I'm not good enough, I'm not smart enough, I need to have all this control. And I think the control factor is more of a limiting belief because you've already seen success. You've already shattered that because you're already living not in your market anymore. You're already giving out some control. You're already partnering with others. But how are you been able to? I don't want to say you'll never really conquer or get rid of the fear, but how have you been able to combat a lot of that?
Just recognizing when it comes up,
Mm.
and that recognition right there, it goes a long way. And then I've done a few exercises to help me, get over that.
Let's dive into those exercises.
It's a
I
lot of
want to.
personal growth. I'm big into personal growth, my wife and I, and we're going to continue on that path and um, just improving ourselves, and in turn, we can help others improve.
So to talk
So,
about that a little bit, talk about some of those exercises because I know you shared with me before we got on that visioning. That visioning, it's amazing when you put intention to something and you really have a plan. You can have a plan, but if there's no intention, there's no energy towards it, and it's not really a big goal for you. It may not manifest itself. But share that story about the Florida about having a house in Florida.
oh yeah, so it'll be 2 years ago, coming up in a couple weeks here, that we bought this house in Florida. Um, Originally, I went on a men's retreat, and we did a solo where you're camping for 2 days by yourself, and it just gives you a time to think about your life, and then we had to write out our 5 year vision, 10 year, 20 year vision, and where we saw ourselves in that time. And in that time, I wrote down that I wanted to have a house on the water with a boat dock where I could have a boat and just go out to the ocean. I love boating and fishing, so those are my big hobbies. And then a couple years, and then I want to say like 6 months later is crazy. One of our real estate agents moved to St. Petersburg, Florida, and he said, "I found you the house. It's on the water. It checks all your boxes, and it needs a lot of work." Which I was looking for as well, so we could get a better deal on it. And so it was a heavy renovation, $500,000 renovation repair we put into it, and then also the price tag on it was pretty hefty. So we brought in some investors, some friends of ours, and it was going to be the original plan was a vacation rental. And through the whole process, we went through vetted different contractors and thought we had it all figured out. I still had my construction going on in Omaha. I'm going to hire a contractor down here, and this guy was recommended by multiple people, and thought it would work out. um, in hindsight, yeah, where I probably failed is I put too much thought on, that he's going to be able to do this all and get it accomplished without much oversight, and hence I had to found out early in the game that I had to be down here more often than I planned on. I already had big projects going on in Omaha. How's this going to happen? And again, I was trying to do it all myself and didn't really ask for help from my partners. I thought I could get this all done. So hence that compounded, and it took longer than planned. And in the meantime, we ended up getting through it. However, we're 2 years into the project, and I ended up buying my partners out because I got nervous with the market changes, and my wife and I are like, you know what, we committed to this. We aren't going to let it fail. If we sell it right now with an unfinished house, who knows where we'll be investment wise. Let's ride this thing out. And hence, I think looking back on it now, it pushed us to move it down here and to, get out of our comfort zone, try something different.
Mhm.
And so, it was a dream of mine, and we're here. We have a beautiful view of the water, and it worked out the way it should be, you know?
So, Mike, if I had told you that 10 years ago that you'd be able to do something like that, you'd probably think I was crazy, number one. But number two, the thing that's powerful about the story to me is that you had that intention I would never go in the woods by myself for 2 days camping. I would last for about two
Yeah.
hours. I would not be able to hang out by myself in the woods, maybe at the beach by myself. But as you're out there and you're reflecting, you did a couple of things
Yes.
that were really powerful. You made intentions out there, and then you also told a few people about it because your
Yes.
realtor moves to Pensacola. And if you're
Yes.
living in a vacuum and nobody doesn't know about it, they may not call you up for that. So it's important to have a dream or have a goal. If you're getting into multifamily, make sure you tell your friends and family because you may need money from them one day. So that's really important. But then
Yes.
also following through on it. You know the value. You know now all of a sudden, hey, I can get investors. Whereas 5 years ago, you didn't have that skill set. You learned that skill set through trial and error and through joining the community. Then when you get down there, all of a sudden, I've got to do more work into it. And you have partners, and the partners want to leave, and it gives you the opportunity to say, hey, this is my dream. I've been dreaming about this for the last 3 years. Let me take a chance. And the worst thing that can happen is Mike gets into the house, he moves in, and then if he doesn't like it or it's at a loss, he can sell it and go back to Omaha. But the whole
Yes.
idea of taking that opportunity and taking that chance, I think, is what life is all about. But the thing that I love about it is you created a purpose. You created really a thing of what you wanted. Most of us are always focusing on what we don't want. When you put
Mhm.
intention to what you do want and then you start putting action towards it, that education times action will ultimately equal results. And that's what has manifested through the results of your work. Now, one thing you did wrong, that I would say is, and it hurts a lot of businesses, is that lack of communication.
Yes.
Sometimes we're just in the weeds and we think what other people understand and they can read our minds and things are going bad. So for anyone in business and multifamily, I've been guilty of this countless times, probably weekly, and especially with my wife. If there's lack of communication, things will break down and people will not understand what's going on. So make sure that you communicate with your partners. Make sure that there's expectations. I mean, in this case, it worked out well because Mike ended up
Mhm.
living there, but that's really powerful. Now, what I want to really share with the listeners is you have this big deal that you have going on right now. You just put a big deal. Let's discuss the deal, where it is, and let's go through the buy right, the manage right, the finance right, and how it's checked off all of those boxes for you.
Yes. So currently have 107 units under contract in Kearney, Nebraska. And everybody's like that I've talked to, where the hell's Kearney, Nebraska at? It's a small town in the middle of Nebraska, right off Interstate 80, 45,000 people. Largest employer is the College of the University of Nebraska, Kearney. Um, it's a Division II college. And then the healthcare system, the hospitals are the second largest employer. And
Mm-hmm.
so we feel it's a great market. It's been an overlooked market. There's a need for housing. 107 units, 100% occupied, and there's a waiting list for people to move in there. And so, looking at it too, the rents are below where they should be. We've already mentioned that to the current property manager and the ownership, and we've been negotiating this project since April, the price on it. And when we let them know where their rents are at, they've put in a plan to increase the rents. And once somebody moves out, they put the rents at what we recommended they should be, and that's continued to increase as we're negotiating this whole project.
Wow.
And
So you have the buy right piece. You like the
yes,
market, and I would call this maybe a tertiary market, but that's
yes,
okay because they're cap rates are a little bit higher, values are a little lower because there's not a ton of demand. Like you said, if you're trying to pitch this to investors, they'll know where Miami, Florida is, but they
yes,
may not know where Kearney, Nebraska is, which to me is fine because when we started in Knoxville, Tennessee back in 2011, not many people knew where Knoxville, Tennessee was. But if you already diagnose the situation and it's 100% occupied, you know that right then and there that there's demand and that rents are a little bit lower than what they should be. So your buy right checks off what you're looking for. Good, stable
yes.
market, has good jobs. You have a good property manager. Let's talk about the finance right portion. How are you guys financing this deal?
We're financing it with a Freddie loan. We're quoted at 6.9%,
Mm-hmm.
uh, 2 year interest only, and 30-year AM, and uh, and then the rest of it. So the purchase price is 9,075,000, and then we're going to raise 4 million.
Awesome. So I'm
Yeah.
writing numbers down here. So
Okay.
for you, and this investment's open, correct? So what I want you to do is just
Yeah.
right now give me your email address. If anybody wants any information on this, it's going to be to me. at $9 million. It looks like it's around 85 or
Yeah,
87,000 a unit, and it
85 a
probably
door.
checks out the yeah, it probably checks off the 1% rule. What are rents going in right now? Do you know what rents are average going in right now?
Yes. So they're around 600 for the studios. It's a 30% studios and 70% one beds. That's a mix of them. And,
Okay. And then
and the
on
one
average,
one bed the one bed's around 740 for the one beds, and so we're
740?
we're putting
And
the
what
one beds at 840 and the studios at 740 is where they should be.
so you're going to be around the you're going to be around the 1% rule, which is really good, which
Yes.
is a good number to be at. Then so you need to raise $4 million. So email address. What's the email address where people can reach out to you, get more information on this?
Mike at Schlick, that's SCHLICK .co. So
Mike at schlick.co.
dot .co.
Okay.
Yeah. And then also we like this deal that has 2.5 acres that are vacant land, all part of the deal. And so we want to add storage units to it. The current property manager pulled all the tenants to ask, or do you want garages or do you have storage units anywhere? And the majority of them have offsite storage units. So it's like, why not add storage units on this vacant land? And then also
Wow.
they're they have one parking stall per apartment, so we thought we'd add some garages as well.
Wow, that is
So
so you that is awesome. What's your exit strategy? What do you plan to do with this property? Hold it 3, 5 years, plan to flip out? What's the goal with it?
I'm big into holding for the long term. I mean, 10 years plus.
Mhm.
Again, it's the pool of investors. If we get people in and, they see the 7-year exit, 7 to 10 years, I'm okay with that. But
And
definitely,
then you're
I want
probably
to hold for 7.
and that's the thing. You're at 6.9% right now. You can
Yes.
refinance this deal, give capital back to the investors, and continue to hold it. That'd be an excellent strategy because what you're trying to do here is, as far as those storage unit goes, there's a lot of value. There's where you're trying to increase NOI, and on every storage unit, if you're able to add even 100 storage units at $30, that's an additional $3,000 a month. Let's say at $36,000 a year at that NOI at a 6 cap, you're looking at a significant value. But it's also a great way to maintain the tenants too, correct?
Yes. Yes. And the current owner has plans to do duplexes and maybe some small apartment buildings on that land and has already gone through the process with the city approval. However, I just feel with construction costs the way they are, the uncertainty, um, and having a construction background, I feel that storage units is the way to go. We've kind of looked around the area and there's a need for it. So I think it's
That's
an
awesome. And
easier build. We can get these done right away and fill them up.
I was just about to say, I mean, like, if you have that background, they're not very expensive at all. Even if you want to put
Mhm.
some type of climate control, if you do that, they're not expensive. And then obviously you have that component where it's a separate business. So that's what multifamily is all about. You have one business generating revenue and you have additional business. So you're creating multiple streams from one asset. That is awesome. So for you, once you're looking at this deal, how do you analyze deals? What are you looking for in a deal? I mean, this checks off a lot of the boxes, but what is your real buy right, finance right, manage right strategy?
Cash flow day one. That's the other thing I failed to mention. It cash flows day one, 8 to 10,000, depending on where we're coming in on our debt. So yeah, so we're always
Wow.
looking for
Okay.
deals that cash flow, which is tough to find, I think, in today's market. Uh, yeah. So the last one we bought was a 31 unit last year in August, and we've been analyzing over hundreds of deals in the last year to finally find this one. And this one was on the market, I think, at 10.5 million, and we got them down to 9 million just through
Wow.
negotiating the
Let me
last 6 months.
Yeah, so let me ask you this question. As you're going through multifamily and you've got into it, someone listening to this says, "Well, Mike's been in multifamily. He's been in real estate for the vast majority of his life. If I'm
Yeah.
listening to this and I want to get into real estate or even multifamily, what should I do? What are the next steps? The first couple things that I need to do to get into multifamily?"
Is making those relationships and finding good partners. Like I had mentioned before, my least favorite thing, or the thing that I'm not very good at, is the numbers part of it. My partner, Tanner Sherman, is amazing at numbers. Loves spreadsheets. Will analyze deals every which way, and so he's very actively running numbers on everything. Whereas I'm
Mhm.
walking the units, looking at the different repairs that need to be done, um, finding out the operations, how's it managed, what kind of people are in place, and that's the other thing I've learned too. You're only as good as your people on anything.
Mhm.
So I've grown my businesses, and it's always been finding good people and doing that. It's all about core values. We have our list of core values for our company, and we hire by our core values. And it basically anything in life. If I partner with somebody, I want to know what their values are. What kind of values are they bringing to the table? And we only have one chance at this. I want to do the right thing on anything I do. So I'm all about
You're
integrity,
preaching.
being honest, being an upstanding person, and um, in anything I do.
You're preaching to the choir because that's what we preach the core values. We
Hmm.
preach the teamwork, and it's one thing when you're getting into it. Just for me, if you're going to get into real estate or any venture, just educate yourself. Get in, educate yourself. I think the second thing is just understand why you're doing it. You really need to understand why you're getting into any venture, and I think multifamily is a great way to create some kind of wealth, whether it's for retirement, whether for its income today or income tomorrow. Once you understand that, and I think ultimately, the last thing I may say selfishly, just join a group, join any group, and make sure that you put some skin in the game. Because I know Mike has been to the majority of our events. He's in Omaha. It is not easy to fly from
Yeah.
Omaha to any of the venues that we go. Sometimes he takes us take 2 flights, 3 flights, but he shows up to all the events. He networks with other people. He does his coaching calls. He gets on boots on the ground, and he's out there networking and putting in the work. And I can't see Mike being one of those cubicle guys. So he keeps
No.
talking about it.
No.
So he's not a
No.
cubicle guy, but but you're a hard worker, and you need to
Yes.
get out there. So for
Yes.
people to say, "Hey, I just joined this group and I did well," you need to join the group. You need to invest in the group, and then you need to do some work, put some work in the group. And for everybody out there saying, "Hey, I've never done this before," I just told Mike this off camera. We're all winging it. Everybody out there is
Yeah.
trying to figure it out, trying to wing it, and we're just trying to grow our business. Mike, last question for you. Where do you see yourself in the next 5 years? Where do you want you and your family and your business to be in the next 5 years?
In the next 5 years, I want to be partnered on more multifamily projects.
Mm-hmm.
Let's say 500 doors, if you put a number on it.
Mm-hmm.
Um, and then spending time with my kids. They're at the age of 9, 7, and 4, and these are the valuable years of their lives. And so I'm really pouring into them. I don't know if I mentioned my kids are adopted. We went through that whole process of adoption to have the family that we have. We put a lot of work into that as well, and just being a part of their lives and continuing to have them grow with the values that we have and carry that legacy on, whether it be in multifamily or whatever path they see themselves on. But that's my wife and I's big why is why we do real estate is for the future of our children and our family. And then also enjoying the ride and having partnerships with everybody. I love being around people and making those new relationships and enjoying life with everybody else. Going fishing with other Jake and Gino members and meeting the community.
I love that. Mike, I'm going to recap the story. I'm going to try to because you're
Okay.
going all the way back to the year 2002.
Yeah. Yeah.
You're on a 12-unit property. I
Yeah.
could see you as being a property manager, being on there. Then from 12 units, going to 75 units. Then from 75 units, buying a duplex and being
Yeah.
the project manager. Then from going there, starting another company. And then from going there, buying the 20 unit with Chris Pomalu. Then a 30 unit. Then scratching your head and going, Chris, how are you buying up half of
Yeah.
Omaha here? I don't know where
Yeah.
you getting all the money from. And what you don't know sometimes can hold you back. And I think having the limiting beliefs and the scarcity, and then joining a group, and all of a sudden your peer group just raises you up to the standard where you are right now. And now you're bringing other people along with you and actually taking the time to develop yourself, to work on yourself, and actually to work on your goals. And then that component that you held off at the very end, which is really important to you, your family. You're not just doing this for yourself and for your wife. You're doing it for your family, and to be able to share that with them, and to be able to pick a vehicle like multifamily to be able to grow with the family, and then for them to see all of this hard work is for the family, but it's also for enjoyment. And you actually are creating wealth. It's not a one off where you're doing a house, sell it, next one, sell it. This is true generational wealth that you're building. And one last time, email for the listeners.
Mike at Schlick
Mike, I want to thank you for being a great guest on the Movers and Shakers show. If you want to be the next guest, email Gino at jakeandgino.com. Love to get you on the show. Mike, good luck with everything. It was great seeing you, and I will see you at the next event.
Okay, thanks, Gino.